in this rising rate environment, right? A lot of people took a look at SVB, right? All the money they took from startups, et cetera, they thought they were doing the smart thing. 90% of that went into long-term securities, i.e. U.S. government treasuries, right? But nobody thought, well, hold on, maybe that's not such a good idea with interest rates rising. Then segue that to Japanese banks. The last I checked, I mean, because rates have been so low, right, they've bought a ton of U.S. treasuries, right? And the unrealized losses on their bond portfolios for these banks is north of $30 billion. How much of that was a factor, too? Like, oh, you think SVB is bad? Take a look at Japanese banks and their exposure.
Yeah, I mean, from what I understand, the most exposed of the Japanese banks are banks like Norinchukin or Japan Post Bank. I think that, the main city banks, they certainly have a large amount, but I think it's relatively sort of weighted off elsewhere, and regionals, generally a relatively small amount. So I think there are certain banks that are more heavily exposed, and yeah, I mean if that's definitely a kind of potential risk out there.
Oh yeah, Ken.
Hey, yeah. So this is Ken here from Singapore. So my question is, my colleagues on the Japan desk, still feels that value stocks will perform very well in Japan because, despite the fact that we had a very strong run up in value stocks in Japan in 2022, they see that with the earnings yield that's still, very attractive in Japan, and the fact that, when you look at overall price to book valuations in Japan is still one of the lowest, throughout the world. They still see that as a very strong opportunity for, to remain bullish on Japan and in particular the value stocks. Do you share the same sentiment as well?
Yeah, I mean, if you look at the Japan banking sector, back in sort of 2005, only 10% of Japanese banks trade below book. That's now over 80% of Japanese banks trade below book. And if you look at the topics, it's trading at 1.2 times book. S&P is trading at 3.8 times book. So, there are. I think Japan has been the big potential value trade that hasn't panned out yet. The question is, will that value in Japan, those rich corporate balance sheets, will that be realized? I mean, if you're a global investor, if you put all your money in the S&P and NASDAQ over the last 20, 30 years and almost ignored pretty well every other global market, that would have been the right thing to do. And, it would have been better to completely ignore Japan. But, is there a trigger? Is there a catalyst for that value to be realized? And, perhaps there is. I mean, if you look at some of the recent buybacks, Citizen Watch, which is, in fact, we've been the only advisor recommending over the last couple of years, announced a 25% buyback. That's almost unheard of in Japan. And now you've got Dai Nippon Print announcing another 25% buyback over 3 years. That's this company that Elliott's involved in.
Yes.
And there's an absolute plethora of smaller companies which are getting a lot more active with shareholders and improving shareholder returns. And that's quite apart from all these large corporates who have been going through huge restructuring, like Hitachi and Fujitsu. So, there are potential capital.